Here we go again. It's great to host you this Wednesday on Armourgate Radio Communications. The theme is corporate financial strategy and sustainable growth. Corporate financial strategy and sustainable growth. And I'm Abiodun Abari. Welcome everyone. Yes, delivering for our clients at all times, irrespective of the prevailing conditions, is the oxygen that we thrive on at Armourgate. So we prioritize the ability of our clients to proactively engage stakeholders and ensure that proactively engage stakeholders and ensure that environmental, social, and governance principles are embedded in strategy to ensure sustainable growth. So, sustainable growth occasioned by the corporate financial strategy of the organization. Having the corporate financial strategy being pivotal to achieving sustainable growth. Very important to continue to look at and understand those principles that need to be front and center in actually crafting a corporate financial strategy that can lead the organization to sustainable growth. So I won't talk about what should be prioritized. You should understand that what should be the priority as regards strategy. Is it a focus on fixed assets or corporate governance or environmental and social factors? Okay. Yes, for instance, how much of an insight does a metric like maybe energy return on investment gave in terms of sustainable growth? All right. So how much does the adoption of green strategies impact sustainable growth? Adoption of green ways, green means. And trying to how much does that actually impact sustainable growth? Okay, there have been studies that show that environmental factors are more impactful for sustainable growth than corporate governance. Okay, and we also want to talk about the improvements of the organization's position. We're talking about value addition for shareholders, the attainment of stakeholders' objectives, very, very important. And we want to ensure that the growth is sustainable, is balanced, because unsustainable growth usually leads to the depletion of resources of the organization, and that can actually exacerbate the debt burden. All right, so growth must not be too fast. All right, and we understand that too fast growth can lead to erosion of values. The organization is exposed to ethical issues, and the growth must not be too slow. That will too slow growth will make the organization vulnerable to competition and economic and business headwinds. So it's very, very important to achieve a strategic balance when it comes to growth. All right. So what is the adequate corporate financial strategy to achieve a balanced, sustainable growth? Yes, we talk of frameworks that underpin, talking about the adoption of sustainable financial practices and the quest for balanced, sustainable growth. Okay, so we continue to look at strategies that have been adopted and successfully implemented by organizations to achieve sustainable growth. Okay, and for organizations who are committed to environmental, social, and governance principles, what is the correlation between the strategic financial component and the overall long-term success of the organization? Okay, so we continue to drum on the importance of effective and holistic stakeholder engagements, all right, and as well as transparent financial reporting. All right, of course, the alignment of financial strategies with diverse stakeholder expectations. Okay, and talking of investors, customers, governments, communities, and so on. Very important that you align the financial strategies of organizations with diverse stakeholder expectations. Very, very important. Stakeholder engagement and transparent financial reporting. All right. So, how much do regulatory frameworks and the standards and the requirements from the industry, how much do these things shape corporate financial strategy? How much do they account for corporate financial strategy? Talking of regulatory frameworks and standards and requirements of industry standards, industry requirements, regulatory frameworks. How much do these actually shape corporate financial strategy? How much do this the consideration when it comes to considering the factors that account for corporate financial strategy? How much of a factor regulatory frameworks and industry standards and requirements? All right. So the need for CFOs to integrate sustainability into their corporate financial strategy. Very, very important, because their approach must be holistic to achieve desired results. Talking of economic and financial goals must be aligned with ethical underpinnings. Yes, very, very important, because corporate financial strategy should drive sustainable growth, by integrating, the traditional financial goals, talking about profitability, stability, and so on, with the environmental, social, and governance objectives. All right, so as to ensure long-term value addition, for our stakeholders. All right, so the approach actually is beyond the short term, right? The short term objectives of our profits maximization is actually meant. Actually, meant to achieve resilient, efficient, and very reputable brands. Okay, so talking of financial strategies for achieving sustainable growth. Okay, we know that the financial planning and budgeting aspects very, very important. Okay, should be integrated. All right, so you align financial planning, budgeting, and forecasting with the general organizational goals. Okay, and of course you understand that sustainability objectives too are very, very, very crucial, so that the allocation of resources to drive long-term initiatives, to drive initiatives that will improve, that will impact positively the long-term value, the resilience of the organizations. Okay, so of course, so like green investments in green or clean technologies. Okay, and of course we also focus on development programs for employees too. Okay, so very, very important. And I'm talking about the capital allocation aspects. All right, so for capital allocation, we want to ensure that there are responsible business practices, responsible investments. So sustainable growth, okay, requires that the projects invested in, there is that balance of financial returns with positive social and environmental impacts, not just financial economic objectives, but also the positive social and environmental impacts very, very much considered. So talking of capital allocation in terms of being responsible business wise. All right, being responsible investment wise. Okay, and that ensures that even though the economic or the financial returns are short, we want to ensure that the social and environmental impact of the projects is positive. Okay, so for capital budgeting, the profitability is well assessed. okay, and the long-term risk of the projects too, so that when they are matched, decisions can easily be made by management. So, and of course, a slew of sustainability factors too are also on the front burner to ensure that the decision is optimized. And I'm talking of sustainability wise. All right, so green financing, very, very important, utilizing financial instruments like the green bonds or loans, okay, loans that are sort of are sustainability linked, okay, so can be used to fund eco-friendly initiatives, environmentally friendly initiatives, and actually also bring in environmental and social and governance focused investors, right? And that will impact positively on cost of capital efficiencies. Okay, green financing, exploring green financing has the potential of actually bringing about positive impacts when it comes to the lowering, or when it comes to impacting cost of capital efficiencies. Okay, because when the financial instruments like green bonds are utilized, and also sustainability linked loans, okay, can be used to fund environmentally friendly initiatives. All right, and that actually can attract ESG focused investors, investors who have ESG objectives as at the heart of their activities. Very, very important. Okay, so prioritization, of course, we understand that it's projects that give strong, potent social and environmental returns. You know, not just the economic or financial returns. Okay, so those projects that also give strong social and environmental numbers. All right, those are the projects that will actually be prioritized. So we're going to talk about the cost management and improving cost efficiencies, operational efficiencies too. So sustainability practices too can actually lead to effective cost savings, cost savings, improving cost efficiencies. Okay, I mean, when we talk about optimization of resources, that optimize resource use. Okay, so the waste, fraud, and abuse is reduced to bare minimum, and there is an increase in energy efficiency. All right, so increase in energy efficiency can be brought about through adoption of our sustainability practices, which will actually also result in costs efficiencies. Okay, so financial strategies should actually be able to identify these inefficiencies, right? So that operations can be leaner, and when we then do a cost benefit analysis, decisions can be made that can support improvements, and also bring about improved profitability, and of course the environmental figures, the environmental performance too, very, very important in terms of sustainability. Okay, so of course the capital structure too should also be able to reflect sustainability in terms that sustainable companies are often viewed as less risky by investors and creditors. Okay, so in determining the right mix of debt and equity financing too, right, to achieve financial sustainability. Right, so very, very important that if our sustainability is integrated into the strategic financial management, it allows organizations to have a better access to capital, and potentially have more favorable financing terms, and be able to actually get cost of capital efficiencies. All right, so adopting sustainability, integrating sustainability into financial management can actually bring about, a kind of optimal capital structure, right? Where having giving the organization better access to capital, capital with less cost, which improved cost efficiency, cost of capital efficiency, having more favorable terms, more favorable financing terms. Okay, and that's because sustainable companies, because companies that tow the sustainability path, often viewed as less risky by investors, by creditors. Okay, and of course the risk management must be robust enough to integrate the ESG risk. Okay, I'm talking about the climate change regulations, supply chain disruptions, damage to brands, and and so on. And so all those ESG risks must be integrated into financial risk management frameworks. Very, very important, so that the organization can actively anticipate and proactively prepare for threats and deal with threats, and be able to build resiliently against market variations and business headwinds. Okay, so the risk management framework must integrate the ESG risks too. Okay, to be robust, to be holistic, so that whether it's the supply chain disruptions or climate change regulations, or those factors can easily be dealt with proactively. So, and we cannot overflog the need for stakeholder engagement. The need to be able to have the trust, okay, the support of all stakeholders, and that the assured also goes along with being transparent when it comes to the financial reporting. The financial and sustainability reporting must be clear, accurate, okay, and for the sustainability reporting, the ESG performance scorecards must be actually be utilized. Okay, so and that will actually build trust, from among the. Yes, and of course we will talk about the leveraging of technology, the use of technology that cannot be overemphasized. Right, so utilize data analytics, AI-powered systems, and other advanced technological tools that can help in the monitoring of financial performance. It can help, in financial performance management, and also be able to assess, ESG outcomes in real time. Okay, so that be able to elicit feedback and enable more informed data detected decisions to be made, and improve the overall efficiency of the organization. And talking about technology, when we come back after this break, we'll be talking more about how we can use technology, the different kinds of softwares that are available that can help us that can impact our corporate financial strategy as we go towards sustainable growth. So stay with me.
Armourgate, founded in 2008 out of a desire to build transgenerational structures for organizations, institutions, and nations. We have worked with large businesses, international development organizations, and public sector ministries and agencies. Armourgate, our uniqueness is that we do not just work for you, we work with you. For example, we do not leave you to the task after sourcing talent that will help the new hire settle into robust leadership development programs. We are technical experts in advising and supporting institutions on strategy and leadership, artificial intelligence, strategic human resource management, public sector reform, finance, audit and tax, FAT, and strategic communications. We do all this and more out of a desire to transform nations through institutions and organizations. For further inquiries, email contact@thearmourgate.com. or call +234 810 999 6666 +234 807 957 4151 and +161 0504 6026 www.thearmourgate.org. Armourgate, building to endure and transforming nations through institutions and organizations.
Yeah, welcome back. We are still on Armourgate Radio Communications and its corporate financial strategy and sustainable growth. Corporate financial strategy and sustainable growth. And your host, Abiodun Abari. Welcome back. Yes, we'll talk about leveraging technology, okay, and we'll look at software for corporate financial strategy, and we'll look at comprehensive platforms. All right. Also look at the platforms that are dedicated to financial planning and analysis, and of course, we also look at solutions for specific needs. Okay. So for you have comprehensive platforms too. Okay, because the key features actually to look out for. You want to look out for robust data consolidation. You want to ensure that you have collaborative tools of forecasting, of integration with existing systems. Okay, and when you want to look at the platform. So for comprehensive platforms, okay, you have something NetSuite. For NetSuite is a cloud-based ERP solution. Okay, very very good for financial management and of course internal operations. All right, and you can have a single source of truth for the financial strategy. Okay, so for comprehensive platform, okay, you have NetSuite, and you also have OneStream 2. OneStream 2 is a unified platform, a comprehensive platform that can give financial consolidation and planning and also analysis. Okay, those capabilities are available for OneStream. Also have Oracle S-Base. So Oracle S-Base can be very very useful for multi-dimensional analysis. Okay, so when it comes to complex financial modeling and planning, Oracle S-Base is your go-to. I assure you. And talking about dedicated financial planning and analysis platforms solutions, right? So you have Host Analytics. Host Analytics is actually a cloud-based provider of financial planning and analysis solutions. Okay, we can also can give financial expertise, and also have Anaplan 2. Anaplan 2 is collaborative and a platform that is very very good for financial planning and analysis. It can help make business model scenarios and optimize strategic decisions. Okay, and of course you also have Profix. Profix can focuses on the automation of financial processes. Can give very very potent budgeting and forecasting and of course reporting features. Okay, so for Profix you can have that as examples of dedicated financial planning and analysis solutions. Okay, and we also have solutions for specific needs, like you have Cube. Cube is a spreadsheet sort of a platform. Okay, that's very very important for small businesses, small and medium-sized businesses. Okay, that use Excel and Google Sheets for their planning. So Cube can come in there for you as the solutions for our specific needs. You also have Contrix too. Contrix is a specialized financial modeling tool, financial modeling tool that is very very good for is known for its flexibility and very scalable. Okay, beyond what you have with traditional spreadsheets. And Sage Interact too. Sage Interact is a cloud-based financial management solution that's very very good for small and medium-sized businesses. Okay. So, and what are those things you need to consider when choosing a software? Okay, whether it's a comprehensive platform or a dedicated financial plan analysis solution, or it's a solution for specific needs. So the first thing you have to look at is the integration. Integration, how seamless is the integration with your existing ERP, with with your existing systems. How seamless is the integration? Very, very important. And also look at compliance. Compliance, you want to look at regulatory compliance. All right, you want to verify that the software has features that will help maintain regulatory compliance, and also with support auditing. Very, very important. And look at data consolidation too. We want to ensure that the software can handle complex data consolidation for reporting, for transparent and standard reporting, for accurate reporting. So very, very important. We want to ensure that the software can handle complex data consolidation. And of course, you also have collaboration. Collaboration, very, very important features. We want to ensure that the software has features that can allow for collaboration across units, across departments. Can actually ensure that there is workflows are speedily facilitated. Okay, and of course scalability. Okay, you want to ensure that the solution selected, the software selected, can grow as the organization grows. Okay, that you want to ensure that whether it's a small business focused tool, or even an enterprise level platform. Okay, you want to ensure that the scalability feature is well assured, so that as the organization is growing, the solutions can also grow with the organization. And I want to assure you that at Armourgate, we are actually working very, very productively on our software for strategy that will be comprehensive. Okay, and which will hit the market very soon, and I assure you that is going to be the market leader, the best yet. And when it's out, I think it will be a testament to the kind of work, the kind of priorities that we give our clients. At this juncture, we've come to the end of today's episode. Thanks so much for your time, and till I come up in your devices again, please keep learning, keep impacting. Thank you. God bless, and bye-bye.